The new weekly outlook. This week we only have one red folder news on Tuesday, and the rest of the week is pretty much dry, same like the last week. But last week was one of the best weeks in half a year, without a doubt. Amazing volatility on indices, setups every day, no losses basically. So we need to be aware of Fed chair at 10 a.m. New York time. Other than that, we are going with the equities open volatility on Monday, Wednesday, Thursday and Friday. Let's start with the crypto today. We are starting top-down analysis from the monthly. On the monthly time frame, we are drawing most likely into the monthly breakaway gap at 80k. On the weekly, what's happening is that we are running currently the previous week high, and we are sweeping or running right now this swing high. The best case scenario today will be if we close the weekly candle above this swing high, then the next weekly candle is expected to be continuation and expansion towards the monthly breakaway gap. But previous week high, closure above previous week high will be a good indication as well. But we'll prefer to see close above this swing high because we tagged that one. On the daily time frame, what we are seeing right now is that daily closed above the previous week high and above this daily swing high as well. And right now we are sweeping the previous day low. Potential draw on liquidity is the previous day high, but the only thing that's resisting us from going there is this 4-hour opposing FEG, and for longs to be valid, so they don't have any resistances, we need to flip this FEG to become IFEG, inverse FEG, and then try to long it towards the previous day high and to catch the longs towards the monthly breakaway gap. Let's see. Ethereum is basically the same setup, monthly breakaway gap resting there, weekly running the previous week high, but it's much weaker, and that's why I'm focused on the BTC. Hype is the strongest altcoin right now in the market. It's right now sweeping the previous month high, weekly as well. This swing high, which is also the previous month high, the best case scenario will be to get the weekly candle closure above that swing high and above the previous week high, because then the next weekly candle is expected to be continuation to the upper side, so bullish bias. On the daily time frame, we had some chop and consolidation right here, but we are having this daily FEG where we can move higher from this daily towards the external range liquidity right there. As well, sweeping the previous day low. In this week we are seeing the respects, but I would love to see for our FEG inverse right here to get the closure above that, and then to try get some longs towards the previous day high right here. Let's go over the indices right now. Last week on Friday we got some great news about the war, so we basically repriced to new all-time highs. The thing is that monthly all-time highs tagged on the ES and on the NQ, but on the weekly we have the closure above the all-time highs on the ES, but we don't have that on the NQ, which means that the NQ is weaker asset. By this outlook, we are looking to see expansion and continuation to the upper side, and daily is also in a bullish trend. We can see how we, from the start of the April, right here and right here, we basically repriced all of this bullshit price section from Q1. All this chop right here, no trend, no anything, is erased in a week or two. Just look at this. This is why I love indices and why they are one of the best assets to day trade, because of their volatility. Just look how easy it is for them to run that up. But right now we are in a bullish trend. We are running the previous day high, and with that being said, the next candle is expected to be continuation towards the previous day high right here that's resting there. And potentially three scenarios can happen. Firstly, we go towards those highs at the open, or we consolidate on Monday to create new FEG right here. Or the third scenario, because I saw the Trump is again doing some bad news, doing some bad stuff, we will get the huge gap at the open and we will reprice into the daily breakaway gaps. And from there we will see are we going to go up or down. But we are still in bullish trend, all the time frames are bullish, so it is only valid to look for longs. Let's review the gold and silver commodities. They are also monthly in a trend, monthly push contexts from monthly breakaway gap towards the external highs, same like on silver. But on the weekly we can see that silver is much stronger. Why? Because gold is still trapped with this FEG. We didn't run this rejection high like we are seeing right here. We are just sweeping it. While the silver is running that high and we are not trapped inside of this FEG anymore. And the price is free to move towards this swing high. So that's what we are looking towards next week. And we should be focusing on silver because of the strength and no trap. Right here we can still play the ping pong between monthly breakaway gap and this weekly. All the time until we break that rejection high. So the weekly candle needs to close above this wick. The more it stays in the FEG, of course it's weaker, but there is no proper close above that level, so you can see how we closed above this. So it's valid. On the daily time frame there is nothing much. We have the bullish bias, but we don't have any narratives right now because the daily push context right here was used and it swept the previous day high, so we might get some chop, but we need to demand new context too long. Other than that, it's bullish. And let's go over the oil. Oil had a huge retracement. On the weekly, the thing is that we are sweeping the swing low, but we are also running the previous week low right here. On the daily, basically same stuff. We are running the previous day low and previous week low, but we are sweeping these swing lows, which means that on the lower time frames, most likely because of this week, we have bullish order flow. But I zoomed in to the 4 hour, we still have a chance to move lower from this 4 hour. But right now it's not getting the respect and it has the second chance to move lower from if we get a sweep of this as a 2 candle rejection and move lower. If not, we will see this FEG get disrespected and move towards the new gaps or liquidity levels that we input, swing highs. You can see on 15 minutes that we are in a bullish trend because of that wick. It's showing us that. On 1 hour we don't have any order flow shifts yet, but it's also creating the potential FEGs right here. So we need some time to see how we react from there. Other than that, here is the outlook and safe trading next week.